Alright everyone, Assalamualaikum. Today we are starting a new topic that is called depreciation of non-current asset. What is the depreciation? Why do we charge it? What are the causes of depreciation? How do we make ledger accounts of depreciation and relevant accounts of disposal and non-current asset cost account for the business? So first of all, depreciation is a provision. We charge it as a provision in our books. What is provision? Provision are the estimates that you expect your non-current assets to get fall in value over the period of time. So in order to recover that fall of value of the non-current asset over the time, we charge provision in our financial statements. So first of all, depreciation is a provision that is charged by management according to their expectation how much value of non-current asset is going to fall in the near future. So first of all, it's a provision, and second of all, it's an expense. So let's take an example. Let's suppose a business has purchased a motor van for $10,000. That is the cost of this motor van in the time period of 2020. Alright, the business has used this motor van in 2020, 2021, 2022, 2023, and let's suppose the accounting year end is 2024. We are currently in 2024, the accounting year ends at 2024. So for this particular non-current asset, it is used in the year 2020, 2021, 22, 23 and 24. 5 year of time period that a non-current asset has been used by the business. So the cost of non-current asset was $10,000 and you have used this particular non-current asset for the period of 5 years. So technically speaking, the value of this particular non-current asset must have been reduced over the time. If you want to sell it in the market in 2024, it is not going to be sold more than greater amount of $10,000 which you have bought it before, because assets lose their value over the period of time. Why do they lose the value over the period of time? What are the causes? So next up is causes of depreciation. Examiner might ask you in the theory part, what are the causes of depreciation? You need to memorize these points. Why do the non-current asset loses its value over the period of time? Number one, it could be because of any damage. It could be any outdate, out of technology. It could be obsolescence, and it could be wear and tear on that particular asset over the period of time because of the usage. So these are common causes of depreciation for any non-current assets that is being used by business during their production process. So when the value falls, value of non-current asset falls over time, we charge provision for depreciation. So provision is an estimate that is made by management to charge the fall of value of non-current asset over the period of time. That is the theory part of the definition. When the value of non-current asset is reduced, we charged it as an expense in our financial statement, income statement of our financial statement. Always charge depreciation as an expense because it loses the value of non-current asset over the period of time. To cover that loss, you charge it as a provision, and provision is an expense of a non-current asset. I hope it's clear to all of you. Next up, sometimes they ask you which type of non-current asset never depreciates. There is one non-current asset that never depreciates. That's it. That is, answer is land. The term which is combinedly used in the exam or general in your accounting world, we call it land and building. Okay. So building can be depreciated because of the use over the period of time, but land never depreciates because land's value increases over the period of time. The piece of land always increases its value over the period of time. So only one type of non-current assets that never get depreciated is land. For the theoretical part of the paper, you need to understand this as well. Next up is causes. After causes, next up is methods of depreciation. There are three methods that can be used by the management to charge depreciation in the books. Number one is called straight line method. The formula is cost minus scrap value, or we also call it residual value, divided by life of that particular non-current asset. Or another formula for this is cost minus scrap value, or say residual value, multiply by given percentage in the question. So either they are going to give you the life or either they are going to give you the percentage. It will always be applied onto the cost of non-current asset after deducting residual value. What is residual value? Residual value or scrap value is the value that might be raised at the end of the use of the non-current asset. Let's suppose the cost of non-current asset is 10,000 and the scrap value is 1,000. So at the end of the term, after the usage of non-current asset, the business might get 1,000 in return when they dispose it off. So I hope scrap value is clear to all of you. Next formula, next method that is used by business is called reducing balance method. Over here, we take this formula cost minus accumulated depreciation into given percentage. So now, what is accumulated depreciation? It's a total depreciation that is being charged by the business in previous years. For example, that asset has been used for 5 years. So the previous 4 years depreciation, the total depreciation will be added together, and then you have to deduct it with the cost to find the value of the bracket, and then you need to multiply it with a given percentage. So for reducing balance method, we take this formula, and another term for this formula is called net book value. By deducting accumulated depreciation from the cost of the non-current assets, we get net book value. Net book value means the leftover value of the non-current asset after charging of the depreciation for the year. Okay. So, lastly, third method, that is called revaluation method. In this method, we take a formula that is value of non-current asset at the start of the year plus any additions during the year, some purchases of non-current assets during the year, less value of that non-current asset at the end of the year. Value of non-current asset at end of the year. It's a simple formula to understand, to memorize. That is value at the start of the year less add additions less value at end of the year. You will get the amount of depreciation using the revaluation method. In exam, sometimes they give you value along with cost. So you need to pick only the value that is given, not the cost. Okay. So sometimes in order to confuse the students, they give you the cost and value together and they ask you to charge revaluation method depreciation. So you need to pick the value, not the cost. These are the three methods that can be used by management to charge depreciation of non-current assets. straight line method, reducing balance method, and the lastly revaluation method. Next up is the general entry. What is a general entry? That is passed in the financial statement after charging provision for depreciation. Debit column, credit column. Depreciation is an expense. Provision for depreciation is an expense. Expense always recorded on the debit side. So you will charge income statement on the debit side. Income statement means you are charging it as an expense. And second one, provision for depreciation of that particular non-current asset will be credited in the books. So this is a general entry that needs to be passed whenever you make depreciation of a non-current asset. They can ask you this as well in the exam. Income statement debit, provision for depreciation credit. Next up, let's take some ledgers that can be asked in exam to be drawn after charging of depreciation. First one is that you need to be aware of is the non-current asset cost account. They can ask you to make a cost account of non-current asset. It's an asset account. Balance BD would be always on the debit side, and balance CD should be on the credit side. Okay. If you make any purchases during there, any non-current assets that is being bought by the business, it will be debited. I'm writing purchase over here, purchase of non-current asset, and if it is done by cash or bank, you can write cash or bank over here. I'm writing purchase. Next up is disposal. If any non-current asset has been sold during there, it is called disposal of non-current asset. We will also study it in this video, the concept of disposal. For now, I'm making ledger, so I'm making it in a complete way. So disposal of non-current asset arises when you sell the non-current asset over the period of time. So disposal, in the disposal amount, you need to take the cost figure, the price at which it was first bought. Okay. After doing the questions, you will get this concept as well. So in the ledger account of non-current assets cost account, balance BD would be debited, purchases of non-current assets will be debited, disposal of non-current assets will be credited, and balance CD figure would be on the credit side. Total it off and show the balance BD amount for the next year. That CD amount will become a BD amount on the debit side for the next period. Next up that you need to understand is provision for depreciation ledger of a non-current asset. The nature of provision is the liability nature. Whenever provision increases, it increases on the credit side, and whenever provision decreases, it decreases on the debit side. I hope everyone knows it. So the balance BD of provision for depreciation should be on the credit side, and balance CD should be on the debit side. I'm just following the nature of the account. Next up is the amount that is being charged for the provision during the year. That is income statement amount. By looking at the journal entry, income statement debit, provision for depreciation credit. So in the provision for depreciation account, income statement will be posted on the credit side. And this answer has to be calculated by using either straight line method or reducing balance method or revaluation method, which is given in the question. So income statement amount of the particular year, depreciation will always be on the credit side. And for if you have sold any non-current asset during the period, the disposal amount would be on the debit side. And the disposal amount would be the accumulated depreciation amount of that particular asset that is being used in the business, either it's for 2 years, 3 years, or any number of years. For working, we need to understand certain questions, so I will also make videos on different questions to clear the concept. So in provision for depreciation account, balance BD should be on the credit side, CD on the debit side. Income statement figure should be on the credit side, and disposal of non-current asset, the accumulated depreciation of particular non-current asset, that is called disposal, is on the debit side. Balance CD will become balance BD for the next term, this particular figure. So these two ledgers should be understood by all the students. And in exam, they usually ask you to draw ledgers of such non-current assets that is being depreciated. Let's start with the concept of disposal account. Disposal of non-current asset. Disposal means sale of non-current asset, and for disposal we are going to understand this concept by using journal entries along with the ledger account. So let's take an example. Asset that is being bought in the year 2020 for the cost of $10,000, and in 2022 it is sold for $8,000, and you have received the amount in form of cash. Policy of depreciation, let's say, is 10% using a straight line method per annum. I'm just making a simple calculation over here to explain the concept of disposal through journal entries and with the ledger account. The cost of non-current asset is $10,000. It is sold for $8,000 after use of 3 years, that is 2020, 2021, 2022. And the depreciation policy was 10% using straight line method. So first entry that you need to record in the books is the sale of non-current assets. That is, non-current asset cost will be credited. That is $10,000 in my example, and $10,000 will be debited in the disposal account. So you need to open up a disposal account when you sell a non-current asset. I am drawing a disposal account at the end of the screen. So in this first entry, disposal debit, cost of non-current is carried because it is sold. You have to write it off from the books. In disposal account, the cost would be on the debit side. That is $10,000. I hope first entry is clear to all of you. Next up is the cash that is being received after the disposal. So the cash that is received was $8,000. So cash would be debited by $8,000, and disposal account will be credited by $10,000 because on the account of disposal you have received cash. Cash book will be debited by 8,000. Disposal account will be credited by 8,000. So in disposal account, you need to write cash on the credit side. I hope second entry is also clear to all of you. Next up is the working for accumulated depreciation of that particular asset that is used by the business for the period of 3 years. First was 2020, 2021 and 2022. So to measure accumulated depreciation, I would count depreciation over the time period of 2020, 2021, 2022 of the accumulated depreciation of this particular asset which is disposed by the business. So let's see the working over here. Depreciation in 2020 must have been $10,000, that is the cost, minus 0, there is no scrap value, multiply by 10%. It will give me $1,000 for 2020. In 2021 and in 2022, the method, that is straight line method, will give you the same answer. So the same answer will be used for 3-year time period, 2020, 2021, 2022, which makes up a total of accumulated depreciation $1,000 for 2020, $1,000 for 2021, and $1,000 for 2022. $3,000 is the accumulated depreciation of this particular non-current asset for the time period of 3 years. So in order to reverse this depreciation in the books, because the asset has been sold by the business, so you need to reverse this transaction in the books at the end of the term of disposal. So when we record the depreciation for the year, we record it on the income statement on the debit side and provision for depreciation on the credit side. To reverse this we need to reverse this transaction with the accumulated depreciation amount. The transaction which we are going to record over here is that provision for depreciation, that is accumulated depreciation for the time period of 3 years, 3,000, which we found in adjustment in working, and credit 3,000 disposal account. So this particular entry will be made when the asset is disposed. You need to find the accumulated depreciation of the particular asset. The provision for depreciation would be debited and disposal account would be credited. In disposal account, I will write this amount on the credit side, provision for depreciation, $3,000. So the account is done, and you need to find, is there any profit or any loss that is being made on the disposal of such non-current asset. So to dispose the account, to close the account of disposal, let's see, the total of the debit side is $10,000 and the total of the credit side is $11,000. I hope it's visible to all of you. So the total side of credit is greater than the total of the debit side. I will write $11,000 on both the sides, the balance figure, and the difference of $1,000 should be on the debit side. I will write income statement over here. Now the concept is that when the debit side is lighter than the credit side, income statement amount will be coming on the debit side. There is no balance CD and BD because the asset is disposed, it's not going to continue in the future. So you need to close this account by writing income statement. It could either be on the debit side or on the credit side. When the debit side is lighter, the income statement amount would be on the debit side, which is $1,000 in my example. And if the credit side is light and the debit side is heavy, the income statement amount would be coming onto the credit side. Now what does it mean? The income statement on the debit side means it's a gain or it's a profit on disposal. The business has incurred a profit of $1,000 in selling this non-current asset, and if the income statement amount comes on the credit side, it means it's a loss. Technically speaking, you have bought this asset for $10,000 and in the books you had bought this asset for $10,000, that was the cost. You have received a cash of $8,000 by selling this, and you have also charged the depreciation for the 3-year time period of $3,000. So particularly you have recovered the greater amount than the cost of the asset. The difference is called a profit amount. And for example, if the credit side is lighter, there is a loss. The purchase cost of the business for the non-current asset is greater than the amount that is recovered by using of that particular non-current asset over the period of time. So I hope this concept is clear to all of you. To record the journal entry of this loss, this gain would be recorded as income statement credit, gain or say profit by $1,000, and disposal account would be debited by $1,000. Why income statement is recorded on the credit side? Because it's an income. In income statement you will charge it in other incomes after finding your gross profit, and when there is a loss it will be charged in it as an expense in income statement. So let's see, let's take another example of the same question to find the loss. I'm just assuming some figures over here. Let's assume the cost of a non-current asset is $10,000, the cash that is being received after selling it off is $8,000, and accumulated depreciation, provision for depreciation that is charged, was $1,000. So in this particular example, the credit side is lighter and the debit side is heavier. So I will write $10,000 on both the sides. The difference of income statement will be coming on the credit side by $1,000 after deducting $9,000 from $10,000. So it means you have incurred a loss on that particular non-current asset. The entry of loss, it's an expense, it will be charged in income statement in expense. The entry would become income statement debit because it's a loss, it's an expense of $1,000, and disposal account will be credited over here by $1,000. So there are 5 possible entries that is made in the case of disposal. The first 3 entries are must: disposal debit, cost credit, cash debit, cash or bank debit, disposal credit, and provision for depreciation will always be reversed on the debit side by finding accumulated depreciation of that particular asset that is being disposed. And either from these two, either one entry will be made, either it would be a profit or it would be a loss. Any one entry will be made out of these two. I hope the disposal concept is clear to all of you. To wrap it up, I am making another ledger of disposal, a basic format of a disposal account. The cost of asset will always be on the debit side. The cash amount and the bank amount will be recorded on the credit side. Provision for depreciation will be recorded on the credit side. The accumulated depreciation of that particular asset that is sold. If you are finding income statement on the debit side, it means it's a gain. If you are finding income statement on the credit side, it means it's a loss. Either one of this transaction would occur. So depreciation is a provision that is charged by management that records the fall of the value of non-current asset over the period of time. What are the causes of depreciation? Wear and tear, obsolescence, damage, out of technology. And there are 3 methods that can be used to find depreciation, that is straight line method, reducing balance method, and revaluation method. And one type of non-current asset that never get depreciated, that is land. Land always revalues over the period of time. So they can ask you this type of questions in theory, or they can ask you to make ledgers or make journal entries. We have covered all of the aspects of this topic in this particular video. So I am summarizing this by showing you all 3 ledgers together. And then in the next video, we are going to solve different questions that can be tested in exam. So these are the 3 formats that you need to be aware of in case of depreciation question. Number 1 is cost account. In the cost account, balance BD would be on the debit side, balance CD would be on the credit side. When you purchase any non-current asset, it will be recorded on the debit side, and when you dispose a non-current asset, the cost of that particular non-current asset will be credited in the cost account. For provision for depreciation account, your balance BD would be on the credit side, CD would be on the debit side. The income statement amount after finding working using a straight line, reducing balance, or revaluation method, whatever given in the exam, it will be credited. And disposal account will be debited by accumulated depreciation, and you will find CD figure and BD figure on the other side. For disposal account, cost will always be debited, cash will be credited. Provision for depreciation, accumulated depreciation will be credited. If the debit side is lighter, there is a profit. If the credit side is lighter, there is a loss. So you will write it off by writing income statement. There would be no balance CD or no balance BD in disposal account. So in this particular lecture, we have covered the concept of provision for depreciation, the concept of disposal, and the different 3 methods of charging depreciation, along with the theory, what are the causes of depreciation. I hope you have understood it very well. If you like the video, kindly like it, share it with your friend and family members, and do ring the bell icon for upcoming videos. In the next video, inshallah, we are going to solve different questions with different terminologies, with different policies that is important for your exam. and then we will also solve some past paper questions to make it clear how to solve it in exam. Thank you so much.